Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin, and we're going to be looking at the market cycle ROI from the market cycle bottom. Now, we looked at the cycle ROI from the halving a few days ago, but now we're going to look at it from the bottom. We've shown this chart before, but I want to give some updates to it. And also for the 4-year cycle theorists, there's something in this video for you as well. So please go ahead and subscribe to the channel. Would love to have you join. There's also the Telegram group you can join up here. We have almost 3,600 people. So if you're looking for a community to interact with, we try to keep the conversations in the Telegram community as clean as we can. And then also you can check out the premium list as well if that interests you. So let's go ahead and jump in. So the first thing we're going to look at is just the first cycle. So this is our market cycle ROI from the bottom, okay? And again, this is just measured fairly early on in the price history of Bitcoin. I only have reliable price history near the end of 2010. So Bitcoin was launched on January 3rd, 2009. So, there was some trading going on. There's the exchange of Bitcoin for various, goods and services, potentially for money. But I just don't have a reliable data source for that. So just going by 2010 as our starting point, because that's where anyone would have data from would be. You can see that this is our first cycle. So the market cycle ROI was several hundred x. So this is a logarithmic scale. So we're going up 10x each major tick. So this is 100. This would be 200, 300, 400, 500, between 5 and 600 ROI. This is the first cycle. Let's look at the second cycle. So this is the second one. You can see that here, we started off fairly similar to the first cycle. We started going up quite rapidly, basically with the same slope as the first cycle, measured from that market cycle bottom. But ultimately, we then, we retraced a bit and then leveled off for, about 100 days, and then made another move, leveled off for another 100 days or so, another move, leveled off for a couple 100 days, and then our final move. So these cycles do take, a significant amount of time. Now, the third cycle is the one that many people lived through. This was the one that peaked in 2017. And you can see with this cycle, we initially started, we initially started moving up from the market cycle bottom. So this is actually interesting because what it shows is that any time that Bitcoin bottoms, it almost immediately rebounds at the same rate. Despite whatever market cycle it is, it seems to, at least for the first 3 cycles, to rebound fairly quickly in the short term. And you can see that with these first 3 cycles here. And this one, it was extended out even further. We moved sideways a lot longer, and it was a more gradual increase. You can see the first cycle was more or less just it moved up and retraced, a move up, and then a short retracement, and then another move up. The second cycle was a move up, a retracement followed by moving sideways for a while, another move up and then sideways, another move up, retracement sideways, etc. This last cycle was, a small move up, and then we moved sideways for a long time, and then a smaller move, and then again basically moving sideways before just very gradually moving up to our peak. And note that our peak in our third cycle was around 100x. So we have around 600, maybe around 500 or so, and then maybe around 100. Now, some of you may say, well, these aren't exact. I'm just going with daily data. It's not, it's granulated daily. I'm sure if you were to take minute data from each day, you could easily say, well, the ROI was higher or lower, but this is just the data that I'm working with. So if we assume that $3,100 was the bottom in December of 2018, so if we assume that this was the bottom, and it would have been, about a year after the peak, then we can say that our next market cycle, our fourth cycle, this is what it looks like. So initially, we saw a huge rebound off the bottom, and it happened pretty quickly. But you can see that each time it rebounds off the bottom, it's less and less. You can see the first rebound off the bottom essentially took us all the way up here, the blue line. The second rebound off the bottom is the orange. The third is the yellow, and then the fourth is the purple. So each time the volatility that we see at the bottom is decreasing, which is interesting. It's just interesting to take note of. Now, obviously, hindsight's 2020. It's hard to know where the bottom is until we look back and identify it. But I just thought this was an interesting observation. One of the more interesting things with this market cycle is the rally that we saw in 2019. So you can see it traversed both the third cycle and the second cycle. But again, this isn't necessarily unique. If you go back, you can see that there were other cycles where we were above it. So in the third cycle, there was a brief period where we were above the second cycle in terms of our ROI early on. But in general, we stay fairly far away from them. So in this cycle, and note, we did make a video way back over here. I think it was right around this point. It was one of the first videos I made on this. And I said that what I would expect to happen would be for us to more or less move sideways and get underneath the yellow line. Because ultimately speaking, I think we will stay underneath this line for the duration of this market cycle. Whether it's a 4-year cycle or whether it's a 6-year cycle, whatever it is, I don't think that the ROI will be 100x from the market cycle bottom. If it were 100x, to give you an idea of had you been involved from the bottom of the prior market cycle, for current day, if you got in at 3,100, then 100x would be 310,000. So that's to just give you an idea of the gains that were on the table just the last market cycle. So now we're in this market cycle and we're saying, okay, well, one of the things we notice is that with each cycle, we can see that the peak, it takes longer to reach. And also, it seems like our ROI is going down. So this is where we talk about, okay, well, it looks like we're seeing diminishing returns and lengthening cycles. But again, I know you guys have heard that 1,000 times on the channel, but just bear with me for a minute because I want to set it up so that we can talk about other scenarios and potentially other ways to interpret the data. Not that I'm saying those are the correct ways or that's how it's going to play out. I think the most likely scenario is for us to continue staying below the yellow line. It's possible in the short term if if Bitcoin moves up to say 14K this summer that we pop above the yellow line for a while. But ultimately, I think that we're going to significantly move sideways at some point. Especially just we're not going to be able to keep up with the yellow line. So with the third cycle, I don't think we're going to be able to maintain pace with it. If we were to maintain pace with it, you can see we're essentially at the point where we need to go parabolic. Okay, so we're at the point where the price should go parabolic over the next 2 years or so, or say not even 2 years, a year and a half. We would need to go parabolic over the next year and a half, approximately speaking, to mimic the last market cycle. Now, one of the things we've often talked about, right, is lengthening cycles and the 4-year cycle. And I get that I push the lengthening cycle theory hard. But again, at the end of the day, it doesn't matter what I think. Because at the end of the day, we have the risk metric for the premium list or whatever metric you may have developed on your own. We have tools, and on this channel, we show probably 20 different charts to help us analyze where the top is when we're approaching it. So with that regards, if it is a 4-year cycle, then we'll be ready for it. If it's a lengthening cycle, we'll be ready for it. The point of stressing the lengthening cycles is because that's what I think is going to happen, and also because I want people to mentally prepare themselves for the likely scenario that Bitcoin does not go to $100,000 in 2021. This is what I want people to be prepared for. If it happens, great. But if it doesn't, just know that, well, it may have never been on the cards in the first place based on some of the data. But let's look at a couple of other scenarios because there's other ways to look at the data that could potentially lead us to other conclusions. And there's a lot of people on YouTube, a lot of other people who make videos on Bitcoin that believe in the 4-year cycle, and they all have their evidence for it. So we're gonna take a look at some of the evidence for looking at some other ways to interpret the data. So the first one is not the 4-year cycle. It's just, what if we've not bottomed yet? What if 3,100 was not the bottom? And one of the reasons why you can understand why some people may think that would be true is because, if you look at the first bear market, it was rather short-lived. I mean, it didn't take very long. The second bear market was extended a little bit longer, and you can see the slope is quite steep here. it becomes less steep here. And then maybe the next one, if the bottom's way over here, then again, I mean, I guess it would have to be, it'd have to be way over here somewhere. Then the slope is still, increasing yet. So it's becoming not quite as steep, I should say. Do I think this is the case? No, I don't. I don't think that we're going to go below 3,100. Clearly, it's a possibility. If it happens, we'll obviously be ready for it in the short term, because if we drop that low, then you have to remember we're probably not going to stay there very long. You just can look at the history of Bitcoin, and if we drop like a rock to those levels, just like we did in March, we dropped to 3,800, we rebounded almost instantly. And the drop to 3,100 over here was also an instant rebound, in a sense. So this is just another way to look at the data. So this is assuming that we have not bottomed yet. Well, if we haven't bottomed yet, and we haven't even started the fourth cycle in terms of from the bottom and building off of that, then it would certainly put the next speculative peak many years off in the distance. So this is a potential, and it's a possibility. Do I think it's likely? I don't, but you need to be aware that that is a possibility that could happen. Another possibility. What if we assume that these two cycles here were just one cycle? What if we say, okay, well, the sell-off from the first cycle is fairly short-lived, and in fact, it wasn't its own market cycle, but it was part of a larger market cycle. If we do that, then we get this. So this would be cycle 1. So our red line where you see that peak here, a casual 85% retracement or so, another move up, another peak here, and then finally a third peak in this market cycle. This would put the peak approximately 1,200 days since the bottom. Cycle 2, if you measure it from the bottom, would be approximately 1,050 days from the bottom. So in this sense, it may seem that, okay, well, if we look at it like this, then maybe you could say, okay, well, perhaps the Fourier cycle theory does have some merits. I don't think this is the best way to interpret the data. Looking at this right here and saying it's just, part of this larger market cycle that spanned, many more years, I don't think makes a ton of sense to me. Because at some point, how do you differentiate between this 85% drop and this one? Because it's all somewhat arbitrary if you start picking 85% retracements that are part of a cycle and that are not. So this is why I tend to separate these, but I do know there are people that tend to think that this peak is part of the same market cycle as these other two peaks. So just so you're informed of all the possibilities, this is one of them. Now, if this were the case, then the first cycle would have taken around 1,200 days. The second one around 1,050 days, and the third one would be essentially at this point right here. One of the things that would be somewhat discouraging of this view would be the fact that our first market cycle ROI would have been 10 to the fourth. So this is 100, 1,000, 10,000. So actually 2 times 10 to the fourth. So your ROI from the market cycle bottom would have been 20,000x. The next cycle, your ROI for market cycle bottom would have only been 100x. So we would have gone from 20,000x to 100x. Now, with only 2 data points, you can't really extrapolate. But if you did, it wouldn't really lead us to believe that the next market cycle ROI would be very high. If we're decreasing this significantly from, say, the first cycle to the second. In fact, it would lead you to believe that more or less Bitcoin would maybe move up a little, but ultimately it's not going that high at all if this were the case. Now again, this is not something I think is true, but just so you're informed of all the different possibilities, this is yet another graph that you can look at to say, okay, well, maybe I don't agree with the Fourier cycle, but I can at least understand why some people think it's a thing. And this is what this channel is about. I know I sometimes maybe press the lengthening cycle theory a little bit too hard. But again, I'm trying to show the data. What does the data show? And if you take it that this peak here was part of this overall cycle, then this is what you get. Now, what if we assume that January 3rd, 2009 is our start date? Because this graph right here is starting from, July or something of 2010. But Bitcoin has been around since January 3rd of 2009. So can we really say that this peak was only, 250 days when that's just where we have price data starting? What if we assume that, what if we just assume that essentially this is the bottom and then we take it back another year and a half to January 3rd, where the bottom is likely lower than where I have it measured. I'm assuming that Bitcoin was trading for, pennies on the dollar, or, even less than what it was in 2010, which was already pennies on the dollar. But if we did that, then note that this ROI here, you see it pop up at around 600 days. And the main caveat here, right, is that this ROI would likely be higher because it's only being measured from here, whereas it theoretically would be measuring from day equals 0 or day equals 1 on January 3rd, 2009. So potentially the red line would be way up here or something. I don't know exactly where it would be. If that were the case, then you could see that the first cycle would have taken around 900 days. Okay. The second cycle from market cycle bottom, and we're assuming that January 3rd, 2009 was the bottom. There's obviously a chance that it wasn't. Maybe the bottom came 5 months later. We don't know. If you guys have reliable price data back to that point, let me know, but I can't find it anywhere. So the first cycle, you can see it basically just shot up, and it took around 900 days if you assume it starts on January 3rd, 2009. The second cycle would have started, obviously where we bottomed, and we know where that is, and it would have peaked at around 750 days or so. So the first one would have been 8, maybe 900. The second one would have been 750, and then the third one from the market cycle bottom would have been maybe 1,050 or so. So if you look at this picture and assume that we go all the way back to January 3rd and that price was doing something where it bottomed over here, and that maybe the red line is up a bit higher, and you just consider this peak window from here to here is just the uncertainty band of a couple hundred days where you could see a new speculative bubble peak, then again, maybe there's, maybe this provides a little bit more credence for the 4-year cycle. But basically, even in this situation, it's not much of a 4-year cycle if it can vary by a year almost. If it's varying from, say, 750 days to 1,050 days, then it's not really much of a 4-year cycle. It's more of like a 3 to 5 year cycle, I guess, or something. Or I guess 3 to 5 wouldn't be right. It'd be, if for this one, it would have taken place in around 2 years. This one would have been a little bit longer, and then this one would have been about 3 years or so from the bottom. Again, this is measured from the bottom, and the other, say, year would have come to take place for the 4-year cycle would have taken place before the bottom. So basically the move down. So this move that you see here would have been the end of that. So if you take that as your reference point, the first cycle would have ended after around 1,050 days, which would be about 3 years. The second cycle would have ended about 1,150 days or so, and the third cycle would have been around 1,450 days. So again, you're still looking at about a year discrepancy between. I get that the 4-year cycle isn't really a 4-year cycle; it's based on the blocks. But I'm just kind of hand waving that argument in a sense. But if you look at the data like this, then you could at least understand why people might say that. But I think measuring this from an arbitrary point on January 3rd, where we really don't even have price data, and most people in the world had never even heard of Bitcoin, and it was essentially only being used by a few people at that point. I'm not really sure that you can say that data is very reliable to make any judgments off of it. And in fact, if you just look at the trend from the second cycle to the third cycle, from the peak, this one was around 750 days, and this one was around 1,050 days. And this is why we're saying, okay, this appears to be lengthening cycles. And remember, if this were just moved over here, it would look like, a few hundred days, a few hundred more days, over 1,000 days, and then the next one would be maybe, 1,300, 1,400, 1,500 days. I don't know. But that's the general argument. So we're going to pull up TradingView, but before I do that, I want people to, to remind you, we do have premium content. If you want to find that, you can go to intothecryptoverse.com. Some of the things you'll find when you sign up, you'll get a welcome email. It'll take you to everything you need to know. But the first thing is the quantitative investor. It's the weekly newsletter that I put out, and each one of these reports comes with a premium video, and you can find these videos and whatnot. So if any of these topics interest you, like risk management, the best day to buy Bitcoin or Ethereum, the time spent between Bitcoin risk bands. This is the risk metric I made. So we look at the time spent between each risk band to identify, where are we typically in each market cycle. We also look at Bitcoin hourly price analysis, Ethereum hourly price analysis, and then also various strategies to dynamically DCA, and also the best day to buy Cardano, because we'd been covering that on the channel some. So if this interests you, then be sure to check out my website, intothecryptoverse.com. And if you want a discount, you can pay with cryptocurrency for 6 or 12 months, and you'll get like a 5 or 10% discount. Now, let's go ahead and exit out of this and just pull up TradingView. We do have a new weekly candle, which is always exciting because we primarily look at weekly candles on this channel. Occasionally we'll look at daily candles, but for the most part we look at weekly and or monthly candles, but primarily weekly. And I think, as we have been saying for the last several months now, as long as, it seems like the trend so far is still intact, and we're well above the 20-week moving average at around 8,300, and furthermore, we're still above the 50-week moving average at 8,746, which has actually started to turn negative a little bit here. The slope has. But if you look at these weekly candles, back a couple weeks ago when we were printing this candle and before we saw this huge bar up, we said, all right, guys, well, we're likely either going to see the bar down to the 100 week, or we're going to continue our move that we've been in, and this was just to say like a consolidation period. So far it seems like we're continuing to move. I'm sure you'll see a lot of traders, they'll draw the line, but I think it's getting a little bit arbitrary, because if you just draw it from, say, candle to candle here, you're already, it seems to me that you're already busting through in this region. If you give it a little bit more flexibility and say draw it up here, it still seems like, we're really starting to poke above this trend line. So just be on the lookout, because there certainly is a decent chance that this summer you could see Bitcoin break out and retest some of the local highs that it saw in 2019 at around $14,000. Clearly we're prepared for the opposite to happen. If we were to come back down, then of course we're happy. It just gives us more time to accumulate Bitcoin. Obviously, this is a good thing in terms of just looking at the macroscopic picture and realizing that over the long term, it's a gift in a sense. Again, this is not financial advice, but it would be a gift, in my opinion, if it were to drop back down. Because ultimately speaking, if you're say out in 2023, your future self, imagine it's your future self in the year 2023, and you look back at your purchases in 2019, 2020, and 2021. You're looking back. You're going to be happy. You would be happier if you could have gotten more Bitcoin for cheaper. And you could even look back and say, wow, I bought, at the 200-week moving average 4 times. I bought at it here, and maybe over here. So if that happens, consider it a gift. And, we've been saying this all along. It's not wise to be capitulating when you see candles like this. It's historically not wise. You can obviously say at this last one, if you just put in the money at the 200 week, it did go down in the short term to the 300 week, but it was only there for like 30 minutes or something. It wasn't there very long. The 200 week moving average has continued to be a very good point to purchase Bitcoin, historically speaking. For me, I always have buys set up at the 200 week and the 300 week moving average. I usually put them slightly above just to make sure they get hit in the event that it comes close to it but doesn't quite hit the orders that I have. So I put them a little bit higher. And this is why I always say have capital on the sidelines, because While there is a risk to not holding Bitcoin, we say there's a risk to holding it. There's also a risk to not holding it. There's also a risk to not having capital on the sidelines to take advantage of a move if we were to drop back down. And remember that there's a chance that we go to 14K this summer and still come back down, and maybe by the time we get back to the 200-week moving average, maybe it's $7,000 or $8,000 or $10,000. These are possibilities. We're likely looking at a multi-year cycle ahead of us that will take us to a speculative bubble peak. And if the 4-year cycle theory is true, then what needs to happen is Bitcoin needs to start going parabolic sooner rather than later. We need to get to a sustainable $20,000 Bitcoin within the next 6 months or so. And if we can do that, then there's more evidence to say, okay, well, maybe we're gonna make a run at a 6-figure Bitcoin in 2021. Do I think it's going to happen? I don't really think it's going to happen. If you go to my other website, intothecryptocharts.com, we do have non-bubble logarithmic regression. If you're not familiar with what that is, it's essentially just, sorry, I feel like maybe this froze, but it's essentially just, fitting a logarithmic regression equation to, what I am somewhat discretionarily deeming either bubble data or non-bubble data, but we're doing it, we're fitting it to non-bubble data only. And because of that, it's able to hopefully give us like our primary risk band. And if you look at the chart here, this is our primary regression band. And again, if you look at the last cycle, remember, we didn't break out of the primary regression band until we got above our previous all-time high. And for that to happen again at 20K, if you just go to 20K and then go sideways and look here, this would occur at the earliest, at the peak here, it would occur, say, the end of 2021, beginning of 2022. So, don't get discouraged. Keep up the good fight. The cycle is likely just beginning. Just have a strategy. If you want help with the strategy, then check out my premium content at intothecryptoverse.com. Would love to have you join. You'll get a welcome email. It'll onboard you to everything you need to know. And I would love to have you there. You'll also get access to a Google Sheets dashboard with live risk levels for a few of the different coins. So I would love to have you join. At the very least, please subscribe to the channel. I'm trying to get to 21,000 subscribers by June 13th, because June 13th is the 1-year anniversary of this channel. So I thought it'd be kind of cool to say, over the first year, we made it to 21,000 subs in honor of Bitcoin. So help me get there. We just need about 150 to 200 more people to subscribe. So I hope we can get there. I think we will. Turn your notifications on, like the video. And remember, if you guys like the charts and you want to discuss them with me, and engage with a community that I think is among the highest quality on Telegram. I mean, obviously I'm a little bit biased because it's my own, but if you want to join, then check out the Telegram channel in the description below. We have almost 3,600 people, so it's definitely growing, and I would love to see you guys there. So that'll wrap it up for this video. I know this one was a little bit longer, but I hope it was useful to everyone. I'll talk to you next time. Bye.